mission is not only to make money, but also to have developmental impact. So traditionally, multilaterals like the World Bank, the IFC, EBRD, ADB have looked at greenfield as its really mandate. So when you look at greenfield, environmental social factors are super important, right? So when you're reclaiming the land, making sure that the people are getting, rightly compensated, that when you are reclaiming the land to build infrastructure, that the environment is not degraded, biodiversity is preserved. So these are all very, very important items to consider when making investment in the greenfield. So because we have this tradition in the multilateral space to think about ENS, it's been fully integrated from the board all the way down to the rank and file for years and years and years. So we have a very solid environmental social framework with a policy exclusion list, standards. Now, what we have been interested to do is trying to, continue our work in developmental finance into capital markets. So we saw that the capital markets have this kind of ESG opportunity. So we got on it quite early, and we started developing what we feel is a very good project. So we have launched in 2019 our first ESG-driven credit mandate in the capital markets. So we have worked with Aberdeen to put 500 million in a debt portfolio managed by ASI, is to build sustainable ESG ecosystem in the emerging market in Asia. So basically, how to actually integrate ESG investments. So like Nadine was saying, in 2019, this is like when we first launched this, negative screening for ESG was kind of the norm. ESG integration wasn't really, it wasn't really a lot, especially in emerging Asia. So what we said was, I think we definitely need to be integrated. But more importantly, we focused on kind of two steps ahead, which was looking at how to do the engagement, right? So the engagement, we're guessing that in a couple of years' time, engagement and how to actually do the engagement will be the topic that people will be really focused on, because once you do the negative screening, then you do the ESG integration. The next one to do is really how to engage with the actual companies. So what we have come up with Aberdeen is this 4-step escalation framework on exactly how to engage with these bond issuers that we seem to have a problem with. So you would first start with observation. You would say something's going on. We think we need to take a deeper look into it. And then there's a notification. So we would actually let the issuer know that we're engaging with them, that we have a concern, that we have this in our portfolio, and we want to resolve an issue. And then we will put it on the focus list if it doesn't get rectified. And then eventually we will have to divest. But the divestment is really the last resort.